Good morning, everyone. This is Mike Minter, Chief Investment Officer for Financial Synergies, and this is your Market in Minutes. We're looking back on the week of October 9 through 13. And as I said here today, still having some gorgeous weather, so you got to be happy about that. Although the Mastros lost last night, so not so great there. But hey, it's a 7-game series, right? All right, let's jump into it. So last week on Wall Street, a little mixed, although overwhelmingly up. Obviously, the Dow, which is actually kind of surprising given what happened last week with the war and all that. So, but very resilient. So the Dow was up 80 basis points, 0.79. S&P was up about 0.5%. Nasdaq ticked down just a little bit, and the overseas markets were up pretty handily. Again, a little surprising given the turmoil in the Middle East and all that's going on. So let's step back for a minute and look at year-to-date numbers. Still very, very good. Dow Jones actually showing more signs of life as of late. And the S&P still very nicely up 14%, and the Nasdaq up just shy of 30%, which is incredible. And the overseas markets continuing to move upward. So all in all, year to date, very strong numbers. So let's look at kind of the story around last week. So stocks were very resilient in the face of this attack on Israel and hotter than inflation data than we expected. So prices initially buckled on the breakout of hostilities in the Middle East, but they soon rallied in the afternoon. And this was on Monday as investors gained optimism that the war may not spread, which would be fantastic. It's still a horrific scenario over there, no question about it. But if it can stay contained, then markets ought to be okay. Oil and defense stocks rose sharply, not surprising given the war, and airlines fell. So stocks continued to advance into Wednesday, and falling bond yields and oil prices overcame the disappointment of elevated wholesale inflation. But then when CPI, so when consumer prices also came in higher than anticipated, stocks moved lower in response to these higher bond yields. But weakness continued Friday and a bump in inflation expectations. We've talked about this, all about inflation lately. And this was despite a pretty solid start to an earnings season. We are stocked with earnings going on right now, and it has been overwhelmingly positive thus far. Let's take a look again at more of this inflation story. So producer price index, CPI updates. This inflationary trend appears to be stalling, so that's not a good sign, although I wouldn't say that it's imminent or anything. It's hit a little bit of a snag last week. So September's PPI, producer price, came in higher than expected, rising 0.5 versus 0.3, a forecast. And the year-over-year increase of 2.2 was the most significant jump since April. So not what we wanted to see, but not dramatic. It's not some massive reversal. So this is just a little bit of a scare because this would indicate that the Fed may have to be a little bit more aggressive. But we don't know. So consumer inflation, so CPI data followed, and this came in hotter than expected. CPI rose 0.4 in September and 3.7 year over year. This was above the forecast of 0.3 and 3.6. The news on core inflation was a bit more comforting, rising in line with expectations. So a little bit of a softening there, which is good. So let's take a look at what's on deck for the week. We got a stocked week here. On the economic data side, we've got our Tuesday retail sales, industrial production, Wednesday housing starts, and Thursday existing home sales, jobless claims, index of leading economic indicators. Companies reporting earnings. I'm not sure that I'm going to go through every one of these, but you can see we have a stocked week of earnings coming out. Monday, Charles Schwab. Tuesday, Bank of America. You can see the list here. Wednesday, starting off with Netflix, Tesla. Got some big ones there. Thursday, AT&T, Intuitive, Union Pacific, American Express. on Friday. So it's just all across the board a pretty busy week for reports and earnings. So we'll be watching that closely and report back to you next week. But I hope this helps kind of set the pace for what happened last week and what's going to occur this week. So guys, as always, we'll report back next week on this week's happenings, and hopefully we've got some good news for you. As always, here's our contact information. Contact us about anything financial related or otherwise. We'd be glad to talk to you, whether you're a client or prospect. We're always here for you. So guys, I hope you enjoyed that. Hope it was a little bit helpful, and enjoy the nice weather and a great week. Thanks, guys. We'll talk again soon. Oh, and sorry, a little bit of disclosure here to put you to sleep. Thanks, guys.